Hello everyone, we hope you're all doing well. Welcome to one more video as part of your Economic Survey 2023 series. In the last video, we had discussed what the Indian government thought about Indian economy as of now and what is going to be its trajectory going forward. We had also discussed what were the challenges our economy had faced in the last video. Now, coming to the trajectory of Indian economy in this financial year and the coming years, the government is very hopeful and optimistic. We had only briefly discussed why it is hopeful and optimistic. In this video of ours, we are going to discuss in detail the various reasons for this hope and optimism in our government. Please note that this video is going to be very important for you because in this video we will be discussing various policies and programs taken by the government in recent years, which is going to propel Indian economy going forward in a much higher trajectory. Now, before I start talking about the various reasons, it is very important for us to know what is the concept of economic cycle. Most of you would be aware of this concept, but nevertheless, let me talk about it in a brief way. Now, all of you watch some or the other type of sports. All of you will have your own favorite sports person. Now, let us in our mind think of Sachin Tendulkar, Rahul Dravid, Saurav Ganguly, Virat Kohli, so many other cricketers we have in our country. Now, when they came to cricket for the very first time at the international level, they did not start performing at their peak from day one. They suffered for few months, for few years because they were still learning. But once they figured out where they were going wrong, they worked on those things and they started to see a positive upward trajectory in their career growth. And at one particular point in all their life, all these cricketers' life, you saw them performing very well. This was the peak of their career. Now, you take any sports person in any field, that sports person will not be at his peak for the rest of his career. There will be some decline. That is universal across all sports. Now, if the sports person does not go by practice, work on his skills, then this decline will continue and he will enter one of the worst phases of his career, sports career. In the life of a sports person, what I am trying to say is there are different phases. In one phase, he might be seeing some expansion, some growth. In one phase, he would have reached the peak of his career. He would be number one in all these rankings. He would be winning whatever he is applying for. And there will also be a decline. If he does not work on his reasons why it is declining, then it will continue further. The same phase, different phases we see in an economy as well. No economy at any given point in time will always work in any one single phase. Every economy, be it Indian economy, American, European economy, be it in the present or in the past, would be going through different stages or different phases. These different stages or different phases is what we call as economic cycle. These occur in these stages. First, an economy will start to expand. Slowly, after this expansion, the economy will reach its peak where it is performing in the most effective and efficient way. And because of certain reasons, an economy might also see a contraction. What are these reasons? It could be reasons which are not in our control, maybe even such as COVID, maybe even such as Russia, Ukraine. Reasons could be structural issues. I'll tell you what are structural issues a bit later. So, because of these issues, the economy which is working at its peak will start to see some contraction. And if we do not work on this contraction, if we do not take corrective steps, this contraction will lead to a trough or to a phase where our economy will be performing at its worst. And here also, if we do not take corrective steps, then common people will suffer the most. To keep the economy in this expansion cycle, to keep the economy as much as in its peak for a longer time, to prevent contraction, to prevent trough, what is required more than anything else? It is reforms. It is these reforms that ensure that the Indian economy, or any economy for that matter, will always be in this expansion or peak phase, and it avoids contraction or trough as much as possible. Now, when you look at India as a country now, we have always been trying to implement reforms ever since we got independence. Because when Britishers left our country, our Indian economy was the most exploited. There were systematic and structural issues in any and every field that we could think about. Literacy was very low. Agricultural productivity was one of the lowest in the world. We did not have food security. But we took corrective steps. We took reforms, slow and steady. After 1991, these reforms picked up pace. And ever since then, we have been continuously trying to reform our economy for the better. In this chapter, it's not just that they have spoken about the last few years' ka reforms, but they have spoken about the reforms taken from 1991. And they have drawn a parallel between 1991 ka reforms and reforms which have been taken from 2014. It is very important to understand the basic importance of reforms taken in 1991, and even more important to know the importance of reforms that we have taken from 2014. Now, let us look at this slide. If you look at its heading, it says India has a history of initiating structural reforms. Now, what is this structural reforms? Most of you will have an idea, but let us discuss it in a very brief way. If you just look at a graph that I've given you, here you can make out that the forex reserves that we have had over the years, we have mapped it out. You can easily make out that it was in 1991 that we had the lowest forex reserve, around USD $1.11 billion. Now, when we look at what is a structural reform, this is a major example. Prior to 1991, our economy was almost a closed economy. Even though we had private participation, even though we had accepted that mixed economy planning methodology, more or less private participation was very less because we had imposed so many rules and regulations for private players. And prior to 1991, our growth rate was just around 4% only. This growth rate, many people called it as Hindu rate of growth. It was a derogatory term that many economists had coined. Now, 1991, we came to a stage where our forex reserves were so less that it became very critical for us to change our methodology. It became even more necessary when we went to IMF, and IMF said that we will give you loan, but you have to bring certain changes in your economy. This is what we saw as well. From 1991, ever since we have taken that loan from IMF, we have tried to liberalize our economy as much as possible. This is what a structural reform means. A structural reform always makes a radical change in the core fundamental aspect of an economy. In 1991, we went for liberalization. You've heard of privatization, And finally, you also know about globalization as well. This was an example of a first big bang structural reform that was taken in our economy since 1991. What were the reasons that necessitated it? Balance of payment crisis, low growth, right? And few more reasons, but that is not the immediate demand of this particular discussions. We just have to understand what is structural reform. There are other sort of reforms. If you make a small change in any policy or a program, that is also reform only. But a structural reform differs in the way that a structural reforms changes the whole nature of a program or policy rather than making any surface level changes. Now, India has a history of structural reforms since 1991. This is what the government has also spoken about. Now, how did we take the structural reforms? Now, the core principle of structural reforms in 1991, it revolved around two important things as per the Indian government in your economic survey. They've used the term product market and capital market reforms. We initiated reforms in these two domains. What exactly is this product market? What exactly is this capital market? We have to know. Usually, what happens whenever economic survey comes, I've seen my students, they don't read the economic survey, the whole document, because it is around 400 pages. That is understandable. You have so many other subjects to read. Reading 400-page document doesn't make much sense. So what do? They wait for the concise version, which is made available by various institutions. That's a good enough strategy. Nothing wrong with that. Some people like to watch videos. That is also good enough. But please make sure whether you read the concise notes or whether you watch the videos, whenever you come across terminologies like this, you understand what these terminologies mean. Whether it is being explicitly taught in the video, if it is done, well and good. If it is not done for some reason or the other, please go back, do that simple basic Google search and understand what these terminologies mean. Because in last few years, UPSC has asked questions on terminologies like this. The moment I say capital market, in your mind, what crops up? It's your stocks and shares. That's kind of natural. But the moment I say product market reforms, your mind might not have that clarity. It might be suffering for the right answer. Yes or no? So it is in this context, here I am telling you again and requesting you, if for some reason we have not covered any basic economics terminology, please do that Google research. But as far as possible, from our side, we would have always explained these simple things. Let us look at what is product market now. Product market reform is nothing but that policy that increases competition in the goods and services market. Remember, what is the key term here? Competition. It facilitates entry, not just entry, but also exit to the markets, strengthen productivity, and prevent monopolistic trends. Basically, what you're trying to say, you're trying to ensure more and more competition, and you're also trying to give the freedom and flexibility for players to enter the market and not just to enter, but also to exit the market. This is what is product market reforms. Prior to 1991, did we have so much of competition, so much of freedom and flexibility in our economy? No, that was not the case. But after 1991, we have systematically tried everything possible to increase competition in Indian economy. Because when there is competition, companies will be competing with each other to find the best possible way to manufacture a product and make it as cost effective as possible for the consumers, right? This is what is your product market reforms. Okay. Now, what is capital market reforms? Capital market reforms is composed of those reforms which deal with those institutions and mechanisms with the help of which medium and long-term funds are combined and made available to individuals, business, and government. Now, prior to 1991, it was not very easy for companies to raise funds. Now, how do companies raise funds? They usually apply for loan in a bank. You all know that. Now, but when you apply loans from a bank, they charge interest rate. Now, for a company, you apply for a loan in a bank, it charges you interest rate. It is not a very cost-effective way of raising credit. Much more cheaper way of raising credit is through issuing shares in a stock market. This is a much more cheaper way for them to raise credit. But prior to 1991, that was not possible. But after 1991, we have introduced various capital market reforms which has enabled investment, not just from within India, but also from elsewhere in the world. That is why you have come across so many articles which deals with something called as foreign portfolio investment. Yes, on. This is also called as FI, foreign institutional investment as well. These kind of encouragement for investment from other parts of the world started to happen after 1991. This provided companies a much more cheaper way to raise credit. This cheaper credit helped them to improve their productivity over the years. And we are trying to bring in more such capital market reforms in recent times as well. Retail investment. When I say retail investment, it is the participation of common people in stock market which has increased over the years. Some of this product market and capital market reforms were spoken about in your economic survey, and that is what I have represented over here. Let's look at each one of them in a very brief way. All right. Now, what does it say? The first point, trade and investment were liberalized in 1991. This we have already spoken. Prior to 1991, how was the economy? You could not trade, you could not invest over and above a certain limit. And there was a lot of licensing Raj that was there, right? You have read about all these things. But after 1991, we started to reduce it. That is what liberalization means after 1991. Import licensing on almost all intermediate and capital goods was done away with, and the entry restrictions for firms were simplified. Now, what exactly is this import licensing? Now, import licensing means imagine you are an exporter, all right, and you want to import certain goods, foreign goods, and you can't just buy this foreign goods or import this foreign goods without first getting a license from the required authority. Now, issuing of this licenses prior to 1991 was very stringent, was very strict. Now, if you're an exporter and you require some sort of a raw materials to prepare a finished good, and you have to run around wanting licenses, and even when they give you a license, they tell you that you cannot import over and above a certain limit. Will you, as a businessman, want to buy such raw materials, want to be in business? Absolutely not. Such high import licensing requirements were reduced after 1991. That is the first important thing that you need to know when it comes to this particular statement. What did I tell you? Whenever you come across terminologies like this, please understand its meaning. The next two terms which are important happens to be intermediate inputs and capital goods. Now, some of you would already have an understanding of this, but still, for the sake of clarity, let's discuss this in some detail. These intermediate inputs now, these are the ones that are called as non-durable inputs. Please remember, intermediate inputs are called as non-durable inputs. right? These non-durable inputs could be in the form of goods or they could be in the form of services as well. Now, these non-durable inputs are used in manufacturing of final goods. You're getting my point? Intermediate inputs are non-durable inputs in the nature, which could be in the nature of goods and services, which is used in manufacturing of other goods and services. What are the examples of intermediate inputs? You have energy, okay? You have raw material, which are few examples of intermediate inputs. Now, what is capital goods? Capital goods, please be careful. Capital goods are physical assets which are used in further manufacturing process. What are these physical assets? It could be in the nature of machinery, all right? It could be in the nature of buildings, equipments, and so many other things. Now, if you look at these two definitions, you might feel intermediate inputs and capital goods are one and the same. In fact, if you research on this in your Google, now there are certain sources which say they are one and the same, but in reality, it's not like that. That is why your economic survey clearly mentions two different things: intermediate inputs and capital goods. Look at the definition again. Intermediate inputs are non-durable. What is non-durable? It does not have a longer shelf life. Meaning, once you use that raw material, you can't use it again for another substance. But when you come to capital goods, now they are of a longer durability. Once you use a car, okay, car is also a capital good, right? Once you use a car or a lorry to transport X amount of substance from point A to point B, will you throw away the lorry? No, right? That is the thing. Capital goods are of a much more longer durability, and your intermediate goods, they do not have such longer durability. One more difference between intermediate inputs and capital good is your capital good does not become part of the final product. Car does not, or lorry does not become part of the final product. It is just a medium that you're using for manufacturing or in your business processes. Now, when you look at intermediate inputs, your raw materials, your energy, they become part of the final goods. This is one more important difference between intermediate inputs and capital goods. You can expect either an application based or a statement based questions on this, or you can expect an application based where they will give you few things. Which of the following are intermediate inputs? And they will give you raw materials, they will give you car, lorry, and they will give you energy, and they will ask you to choose which are the intermediate inputs. Hopefully, now you have that clarity between these two terms. Right. Let's look at the other few things which your economic survey has spoken about. The new policy encouraged the entry of private sector firms by ending the public sector monopoly in many sectors and initiating the automatic approval policy for FDI up to 51%. Now, you all know what is FDI, right? That is foreign direct investment. Whenever we talk about foreign investment, right, it can occur in our country through two ways. One is FPI route and the other is FDI route. Now, what is this FPI? FPI is where your foreign investors, they invest in stocks and shares. All right. Now, this is an indirect way of investment. That is what we call. Why is it indirect? Because here the foreign investors are not opening up any buildings. They're not creating any jobs as such. They're just taking their money and they are investing in Indian stocks. Yes or no? But when you look at FDI, now FDI is much more of a direct investment. Here they are investing in physical assets. Here they're investing in human resources of India, and that is much more desirable. Prior to 1991, there was huge amount of rules and regulations for foreign direct investment, for any foreign investment, including FDI. But after 1991, what we have done is we have allowed foreign investment where they can approve or they can invest up to 51% in a company under automatic approval. What is this automatic approval? They don't have to take any permission from any authority. Okay, they can just directly invest up to the limit of 51%. If they want to increase their investment over and above 51%, then they have to take certain approvals, right? But this in itself, bringing in foreign direct investment up to 51% without any approvals of any sort. This was a much more radical and a structural reform that we brought in the country. Which are the sectors which were opened up? You can talk about telecom sector. In 1990s, the major telecom company at that particular point in time was BSNL. But slowly, what we have done, we have allowed foreign players to come to India. You see Vodafone, right? All these things, they have improved the competition and they have improved the quality of service which is available for Indians as well, right? This is what this topic or this point talks about. After that, the exchange rate was made flexible and allowed to depreciate as necessary to maintain competitiveness. Now, please remember, when we talk about exchange rate system in our country, there are basically two systems that we have in exchange rate. One is fixed. We had this prior to 1991. What is this fixed exchange rate system? Here, the value of Indian rupee was fixed, right, by appropriate authorities. They fixed what was the value of Indian rupee vis-a-vis any other foreign currency. But your IMF said, no, this is not going to work. You need to change this. From fixed, we went to flexible. Now, what is this flexible exchange rate system? Here, the value of a national currency is determined by the forces of demand and supply. So, as of now, in our country, we have this flexible exchange rate system. But in our country, there is one minor change, right? Here in fixed system, RBI used to directly involve and decide what was India's rupee exchange rate vis-a-vis other currencies. In flexible, yes, it is demand and supply that decides the rate of Indian rupee, but at the same time, will, sorry, RBI will involve itself, not directly, but rather indirectly in deciding what is going to be the India's exchange rate system within a band. Just to say hypothetically, if Indian value rupee vis-a-vis US dollar is between 65 to 80, our exports will be competitive. Our balance of payment issues will not get any bad. So, if Indian rupee is within the 65 to 80, RBI will not do anything. But in case if it becomes lesser than 65, in case Indian rupee becomes greater than 80 vis-a-vis US dollars, then RBI will come into the picture and they will either buy or sell the securities as and when which is required to make sure that Indian rupee is within this band between 65 to 80. This is just a example for your understanding. If there is too much of supply of dollars, they try to remove certain dollars by buying dollars. If there is very less supply of any currency, they try to infuse that, right? It is as simple as this. Here, RBI is indirectly participating in the market to make sure that Indian rupee ka value is within this band. Why they are involving themselves? Because if it appreciates too much or depreciates too much, it can have negative effects on Indian economy. That is why RBI does this. All right. So what system do we have in our country? Do we have fixed or flexible? We have flexible exchange rate mechanism. And then when did we start this? We started this after 1991. One more example of structural reform. The rupee was made fully convertible on the current account and partially on the capital account. What is this convertibility? Imagine you are a person in India and you want to go to abroad to pursue your education. Will they apply or will they take Indian rupees as fees from you? No, right? You need to convert your Indian rupees to dollars. Now, the same case if you are a businessman and you need to buy certain machine which is produced in Germany, will they accept Indian rupees? No, they might be also requiring US dollars, right? Or euros. So you try to exchange whatever you're holding for either euros or US dollars as in what the German company wants. So this is what we call as convertibility. Now, prior to 1991, we did not have full convertibility. What is full convertibility? In the sense, converting all of your Indian rupees to any other foreign currency without any rules or regulations which prevents you from doing that. But after 1991, what happened? This lack of full convertibility started to decrease. When you talk about current account, after 1991, we allowed full convertibility. What is current account? Current account will deal with matters related to trade. If you are a businessman, I just give you an example, right? So if you're a businessman as of now, and if you want to buy a machinery from America, there is no limit on you. You can convert as in much as in what you require from Indian rupees to US dollars and you can buy it. All right. But when we talk about capital account, now in capital account, we talk about investment and we talk about borrowing. Now in capital account here, we have only given partial convertibility. What is partial convertibility? A foreign company cannot invest in India over and above a certain limit. If they have to invest over and above certain limit, they need to take approvals. This is what we call as partial convertibility. Imagine you're an American company and you want to invest in India. Will you invest in US dollars or Indian rupees? You will invest in Indian rupees. Yes or no? This American company cannot invest as much as it wants. There is a limit to it. There is a limit to what extent they can convert their dollars into Indian rupees. Why are they doing so? Imagine they bring in a lot of dollars. Now, these dollars have to be converted to Indian rupees, and you know that one US dollar is almost what, 80 rupees? Now, when so much of money is invested in India, it might lead to a situation where it will give rise to lot and lots of money in the Indian market. This might give rise to inflation. And inflation affects whom the most? It affects the common people the most. That is why they don't go for full convertibility when it comes to capital account. Same is the case if you're an Indian businessman who wants to invest in any American company, there also there is partial convertibility. So where do we have partial convertibility, in current account or capital account? We have it in capital account. Please remember that. Same is the case for borrowing. Imagine if you are an American company wanting to raise credit from Indian banks, right? A very hypothetical situation, but still you can't borrow over and above a certain limit. The vice versa is also true. Please remember, all right? listen to this question carefully and try to answer it in our comment section. Tourism. Imagine you are a tourist from India and you're going to America. Will you be allowed to convert Indian rupees to US dollars fully, or will it be partial? Please let us know in the comment section. All right. Imagine you're a tourist from India who wants to visit America. Will you be allowed to convert freely your Indian rupees to US dollars, or will there be any sorts of rules and regulations applied? Right? In your UPSC examinations, this is how they're going to ask you, application based. Which of the following would come under full convertibility rules in India? And they will give you tourism, they will give you education, they will give you buying of a American company, right? Things like that. Okay, right. One more thing that I want to highlight in this particular video, in this particular slide, happens to be this diagram of FDI. If you look at this diagram now, in fiscal year 96, FDI was almost around $5 billion. In your fiscal year 97, it rose. In fiscal year 98, it decreased. It again decreased in 99, 2000, but it started to increase from 2002. 03 decreased 4, 5, but ever since 2006, it started to increase. What was the reason behind this increase in the last few years of this particular graph? It was because of liberalization that we saw. And please note, the reason why I'm telling you this in a bit more detail is in your UPSC examinations, recently they've started asking questions. FDI in India increased since 1991 consistently. They might give you a statement like this and they might ask you whether it is correct or incorrect. Has FDI increased consistently after 1991? No, it has decreased in few years, right? This is how you need to look at certain data and facts in your economic survey. You should never by heart it, but rather you should understand the pattern. Now, why did it decrease in certain years? If you remember, in 1998, in 1998, you had nuclear tests which happened in India. And from 1999, you also saw certain East Asian crisis that happened. In 2001, there were 9/11 attacks that happened in America. All these things, right? FDI depends on a lot of factors, right? All these factors, they reduced the quantum of FDI we got. Please remember, FDI has not consistently increased after 1991. One more effect of these reforms that India has been taking since 1991, it's a positive thing. I've just represented that using data. It was retail participation. What did I tell you retail participation is? It is common people participating in Indian stock. It was retail participation that helped absorb selling by FII or FPIs. Now, these foreign institutional investors, now what they usually do is they will invest in Indian stock. But after some point in time, if they feel that European stocks will give them a much higher dividend, what they do, they take their money from Indian stocks and they invest in European markets. Now, if this is done on a smaller scale, it is fine, right? But if it is done on a larger scale, when large amounts of money are lifted from Indian stocks and invested in other stocks, then it becomes a problem. There is a lot of volatility which is created. It will affect our currencies and various other situations. But in recent times, what has happened, even though this FI and FPIs or FPIs might take money from Indian stocks, because of more and more participation, retail participation, even if they take out much money, now it is not impacting us in any negative way. This is one of the positive effect of capital market reforms since 1991 that we have been consistently trying to enforce. All right. Please remember the reason why I'm saying this to you is they will give you retail participation in India in Indian stock market has not increased to minimize negative effect of selling by FII or FPI. The statement is correct or incorrect? This is incorrect. We have evidence which is mentioned in your economic survey which says otherwise. If you look at the next part of this particular statement, Morgan Stanley in recent report maintained that the next decade belongs to India and it has the potential to reach $10 trillion market by end of the decade. India wants to be a $5 trillion economy. India needs investment at a cheaper rate. Okay. Indian companies needs credit at a cheaper rate and Indian stocks. Such participation is good for us in ensuring that there is a positive, okay, trajectory of growth for us. That's on, right? This is what is important. Moving on. Another institution which helped in bringing product market reform that your UPSC, not UPSC, your economic survey has spoken about in this particular edition happens to be Telecom Regulatory Authority of India. It becomes hence important for us to understand certain basic aspects of TRAI, that is Telecom Regulatory Authority. When was this established? It was established in 1997. And was it established as an executive decision or was it parliamentary decision? It was parliamentary. As per Telecom Regulatory Authority of India Act 1997, TRAI has been established with its headquarters located in Delhi. What are the various objectives of TRAI? It's quite simple. It has to make sure that it ensures competition in the Indian economy when it comes to telecom sector. I told you, right? TRAI is nothing but a manifestation of product market reform. And what is product market reform? To ensure more and more competition in the economy. Other happens to be to ensure compliance. What is this compliance? This telecom service providers, now they will be given certain rules and regulations when they're assigned these licenses. Are these telecom service providers working in consonance with these rules and regulations? TRAI has to make sure of it. Okay. Apart from that, what else? It will make recommendations related to telecom sector to the government. Now, these recommendations, can the government reject them? Should the government always accept them? What is the nature of these recommendations? Please note, the recommendations made by TRAI is only advisory in nature. Okay? There is no rule that it should be accepted. Apart from these basic things, you also have to know certain other important things. What are these certain other important things? What is the composition of this particular TRAI? This Telecom Regulatory Authority of India, it will have one chairperson, okay? It will have two members, and it can have two part-time members as well. Okay. Now, if there is a situation which is required, one chairperson will also be appointed in this committee. Now, who does all these things? Who appoints all these people? It is done by central government. Please note, this is by central government only. And who has the power to remove all these people? Again, it is central government. Okay. In your UPSC, this is how they are asking questions. Who appoints the members of TRI? On what basis are these members disbarred? These members can be disbarred if they are insolvent in nature, okay? If they are suffering any physical or mental challenges as such, if they have been convicted, or if they have been accused of any sort of activity against the public interest, right? That is one more important thing that you need to remember. Apart from these things, when these people meet, right? This composition of TRI, when they meet, how do they take decisions? Is the decision of chairperson final? Is he the ultimate authority? No. Decisions are taken by a majority of votes. All the members will vote on an issue, and which on the issue which has majority, that will be accepted. In case if there is a tie, what will happen? The chairperson will have a casting vote. That person will vote again to break this particular tie. It's as simple as that. Okay, right. Moving on. Apart from these things, what are the other things that you need to know? Till what extent will the tenure be of TRAI members, right? Until they reach the age of 65 years or they reach 3 years into their service in TRAI, whichever one is earlier. Okay? They serve in TRAI until they reach 65 years or 3 years, whichever one is earlier. In 2000, there was an amendment which was moved to the 1997 Act. As per this amendment, TDSAT, that is Telecom Dispute Settlement Appellate Tribunal, was appointed, right? And the members of this Telecom Dispute Settlement Appellate Tribunal will be appointed by central government in consultation with Chief Justice of India. One more important data that might be useful from your prelims exam perspective. So if there is any, one of the objectives of TRAI is to look into any disputes that might arise between two telecom operators, right, between customers and telecom operators. Now, in such an scenario where inquiry has been done and a judgment has been passed, in such a scenario, if the telecom service providers they are not happy with the verdict that has been passed by your TRAI, they can appeal that verdict to TDSAT, that is Appellate Tribunal. And this Appellate Tribunal, it will work based on the principles of natural justice. It is not bound by your civil code rules and regulations. It is based on principles of natural justice, rules and regulations. All right. The chairperson of this particular appellate tribunal should be such a person who has either been a judge of a Supreme Court or a Chief Justice of any High Court. I told you, after 1991 ka major LPG reforms, we took a lot more second and third generation reforms. One of such later reforms happened in the year 1991 when the then Prime Minister Atal Bihari Vajpayee pushed infrastructure development to a higher degree. You all know the better the infrastructure in the country, greater is the probability that it will attract investment from private sector, both from within the country and also elsewhere in the world, right? And Indian infrastructure had not received that much of a big push prior to this. So, what was the thing that Prime Minister Atal Bihari Vajpayee did in 1991? Sorry, 1999. He started a project called as Golden Quadrilateral. This project was implemented by your National Highway Authority of India, which works under the supervision of Ministry of Road, Transport and Highways. Now, if you look at this diagram now, this golden quadrilateral, it connects four important cities of India, that is Delhi, Mumbai, Chennai, and Kolkata, right? Four important cities. If you join them, they sort of come like a quadrilateral. Now, the emphasis on infrastructure development is not something which is very new to our country. Because to be very honest, and based on the evidences that we have had infrastructure push dating back to the times of Chandragupta Maurya, as far back as 3rd century BCE, when he developed major highways called as Uttarpatha, right? Apart from Chandragupta Maurya, you have his grandson Ashoka, who also gave emphasis to highway development. And the most important one happens to be Sher Shah Suri, who constructed a system of highways called as Grand Trunk Road, which connected various cities in Indian subcontinent at that particular point in time, right? Sher Shah Suri has been in news because Purana Killa, to which he is associated, recently various excavation activities were started by the government. And we have found out that there is pottery that we have discovered from this Purana Killa region, which goes back to the times of Mauryans as well, right? You can expect some simple questions in this regard. That is why we have added this. Moving on. Another major reform which was initiated by government after 1991 was enacting an act called as Fiscal Responsibility and Budget Management Act in the year 2003. Now, before I start explaining this, let me just draw your attention to what is happening in Pakistan as of now. You know very well as of now that there is hyperinflation and Pakistani economy is going through one of its very difficult phases. Now, what is the reason for it? Actually, there are multiple reasons. One of the primary reason happens to be how they raise their debt or how they raise their loan. They got access to cheaper Chinese loans. Now, taking loans is quite natural for a government because they don't generate enough resources for them, and sometimes they need to borrow so that they can ensure development of the country. So that is quite natural. But Pakistan, when it borrowed money, it did not invest in asset generation. They used money in a very illogical manner, and that loans started to increase. Interest payment on these loans started to increase. When the economy got disturbed because of COVID and other sort of challenges in the last few years, their loan situation, it further got problematic. You're not earning enough money and your loans are increasing on the other hand. Your interest payments are increasing on the other hand. What will come out? You will come out as a bankrupt person, and that is what we are seeing happening in Pakistan as of now. To prevent such sort of macroeconomic instability, our government in the year 2003 decided to pass this FRBM Act, Fiscal Responsibility and Budget Management Act. As per this act, now, the government cannot raise its debt or cannot raise its deficit. What is deficit? It is nothing but the difference between how much you earn and how much you are spending. This deficit, right? Usually you try to meet by raising debt or loans. This deficit cannot be raised over and above a certain limit. That is the whole purpose of Fiscal Responsibility and Budget Management Act. If you raise over and above a certain limit, right, in a very unsustainable manner, the situation of Pakistan might have occurred. So, as per this particular act, now the government before the parliament has to showcase documents such as medium-term fiscal policy statement, fiscal policy statement, macroeconomic framework statement, and medium-term expenditure framework statement. So, what do all these statements talk about? They give an idea to the parliament as to what the government is doing to keep this deficit in check. As per this act, now, initially, we were supposed to reduce revenue deficit to zero, and we were supposed to reduce fiscal deficit to 3% by a certain year. These targets, are we meeting or not? That would be told in all these documents. Now, what is revenue deficit? Revenue deficit is nothing but the difference between your revenue expenditure and your earnings. Okay, revenue receipts. What is fiscal deficit? Fiscal deficit is nothing but your total revenue minus your total expenditure. But here, you're not taking into consideration your borrowings. Revenue deficit give you an idea about what is the day-to-day mismatch we're having. Okay? When we talk about our fiscal deficit, it gives you a much broader picture as to how much is the debt we have in our economy. Now, just to recap once more, fiscal deficit is what? Fiscal deficit is nothing but total revenue minus total expenditure, right? Excluding borrowings. Here, you're not taking borrowings into the consideration. Difference between total revenue and total expenditure. If you look at revenue deficit, here it is the difference between revenue expenditure and revenue receipts. Now, let me put it in a very simple way. Imagine that all of us on this planet now we all strive to meet basic necessities related to roti, kapda, and makan. This is what your spending, your expenditure is for everyone. It's universal. That's on. Now, if you're earning receipts, or let us say if you're earning salary, which helps you to meet all these basic necessities, good enough. But if you're not earning enough to meet your roti basic necessity or makan basic necessities, then there will be a deficit. Your inability to meet your daily expenses or basic needs, that is what gives rise to revenue deficit. You have come across articles where you will read that the government department does not have enough money to pay salaries to its employees. That is nothing but revenue deficit. What is fiscal deficit? Fiscal deficit here, if you look, it is total revenue, difference between total revenue and total expenditure. Here, you are not taking into account only revenue. Here, you are taking into account capital. Just to use this crude analogy, apart, imagine you're earning salary, you're meeting all this roti, kapra, makan ka necessities. Over and above this, you require some amount of money for your health, for your education, for your marriage, or other sort of requirements. In such scenarios, your salary, it is not that high enough to meet those expenses. So what you do? You go for borrowings. Such long-term borrowings are reflected in fiscal deficit. All right. And you cannot borrow over and above a certain limit of your salary. If you start borrowing over and above a certain limit of your salary, you will always be under the probability of going bankrupt. Okay. That is why targets were fixed both for fiscal deficit as well as revenue deficit. Revenue deficit, if you look at it, now it is much more dangerous because here you're not even meeting the basic resources need to meet your basic necessities. If you look at fiscal deficit, all governments on this planet will have fiscal deficit. If not all, most of the governments will have fiscal deficit, right? To try to go for capital expenditure. What is capital expenditure? It is something which creates assets to build roads, to build hospitals. These are capital expenditure, right? A government has to invest in these things. If it does not have money, it should not sit silent. It should borrow some money and try to invest here. That is quite natural. That is why revenue deficit had to be reduced by 0% to 0%, and the fiscal deficit was to be kept of 3% of GDP. This was an excellent act. But unfortunately, what happened? This target was not met. Ever since this act has been implemented, now we thought of reducing our fiscal deficit to 3%, revenue deficit to 0% by 2006, but these targets have been pushed over and over. Why? Because we are facing a lot many issues. By the year 2008, India faced an issue called as the Great Recession. Where did this Great Recession start? It did not start in India, but it started in America. Now, the impact of this Great Recession was felt all across the world, including India. If we had stuck to our principles of FRBM Act and we had said that we will not borrow over and above a certain limit, then it would have been very problematic. Because at that particular point in time, if we had not spent enough, many people would have lost their jobs. right? Private people would have stopped investing. So government took it upon itself to make sure that it invests as much as possible by borrowing money. Once the effect of Great Recession started to decline, the government started to borrow less and less, started to reduce its fiscal deficit more. So ever since 2003, ever since 2006, the targets that we had first fixed initially has not been met. In the year 2016, a committee was appointed under the chairmanship of N.K. Singh Committee. The terms of references for this committee was very simple: to overall view how FRBM Act has been implemented in our country and to suggest any reforms required for better implementation of this particular act. Let us look at some of the important recommendations of this committee from your exam perspective. The N.K. Singh Committee gave its recommendations in this way. It said, apart from the fiscal deficit targets that were fixed, not 3% of GDP, it said by year 2023, we have to reduce our fiscal deficit by 2.5%. Apart from this fiscal deficit target, it also suggested to watch what is our debt to GDP ratio. What is debt to GDP ratio? Right? If we are earning around 100 rupees and we are borrowing around 10, what is debt to GDP ratio? It is 1/10, right? It's as simple as this. Now it said debt to GDP ratio, the whole public debt situation, government debt situation should not be more than 60% of our GDP. And in the 60%, 40% will be for central government and 20% will be for cumulatively for all the states. That is what it said. Fiscal deficit should be the operating target. Apart from this, focus on this as well, public debt to GDP ratio. Now, revenue deficit target, it told us to reduce revenue deficit by 0.8% by 2023. Remember, fiscal deficit to 2.5% by 2023 and revenue deficit to 0.8% of our total GDP by 2023. The committee, this one is quite important. The committee also suggested that you need to establish a fiscal council. Now, this fiscal council will have representatives from government side, will have representatives from central bank, will have representatives from important people, economic experts. This fiscal council will give directions as to what should be the way our fiscal policies should be maintained or carried out, right? As of now, what is happening? It is the government which decides fiscal policies. And sometimes the government can take populistic measure. What is this populistic measure, right? Sometimes you would have read in your articles that the government is implementing a loan waiver situation. Now, loan waiver is very much required for those farmers who are suffering from severe debt crisis. But there are also those farmers who are quite well off and they make use of such loan waivers. And even if you give a loan waiver, now it does not necessarily increase agricultural productivity in any way. These populistic measures are short term in nature. But if you have a fiscal council, now that much of populistic measures might not be required, might not be so easily possible, right? So that is the reason why your N.K. Singh committee spoke of fiscal council. And one more thing N.K. Singh committee said was escape clause to accommodate counter-cyclical issue. What is this counter-cyclical issue? I've told you an economy will expand, reach a peak, decline, and might reach a trough. So in such kind of situations, when economy is performing very well, it is fine. Government can take a back seat and allow the private sector to invest. But when the cycle turns bad, when the cycle turns negative, the government should step up investment, even if it means raising the fiscal deficit. This is what we call as escape clause. In what kind of situations can we raise this particular escape clause? Let us look into it. During wars kind of situations, during any sorts of calamity, right? If there is any agricultural collapse in our country, right? If you are trying to bring in any structural reforms, okay? And if our real output growth, okay, has fallen by at least 3 percentage points, right? For previous 4 quarters, in such kind of situations, we can escape this responsibility of reducing fiscal deficit target by what? 2.5% by 2023. That is what they have said. In recent years, right, we have faced natural calamities like COVID-19, right? So in such cases, escape clauses can be invoked under encasing committee recommendations. One more reform that we took after 1991 in the domain of banking sector, right? There were many reforms that we took in the banking sector. For example, deregulation of interest rates, right? We sorted out by combining or merging, causing merger of various public sector banks to improve their efficiency, right? We have taken a long list of banking reforms. But one of the major reform this year that your economic survey has spoken about is enacting securitization and reconstruction of financial assets and enforcement of Security Interest Act 2002. It was enacted in 2002, and the objective of this act was very simple, to make sure that there is less amount of non-performing assets in the economy. What is non-performing asset? If you have given a loan and within 90 days, all right, for 90 days, if you have not received any amount on the loan principal or even the interest, then such loans will be classified as non-performing assets. Now, whenever you take a loan from a bank, right, the banks ask you to mortgage certain properties, right? Secured loans. We call such loans as secured loans because the loan is based on certain asset guarantee that you have given. So in case if you're not able to meet your loan obligations, the bank will send you a notice. And for this notice, if you have not replied within 60 days, the SARFAESI Act has enabled the bank to take 4 possible course of action. What are these 4 possible course of action? Take the possession of the security for the loan. You can sell or lease or assign the right over that security, right? Or even deal with the same or designate any person to deal with such properties. In the sense, you can take complete possession of the property, you can sell or lease that property to someone else, or you can appoint some other person to deal with such properties. The core principle behind all this possible course of action is the sooner the bank receives some part of the loan it has given or all part of the loan it has given, it is good for the overall banking sector health of the economy. That is what we are trying to achieve in SARFAESI Act. If we do not have acts like this, then it would be very difficult for banks to remain solvent, right? So it was one of the main reasons, this was one of the main reasons why the SARFAESI Act was established. Now, the SARFAESI Act, it also gave permission, okay, for establishing asset reconstruction company, which can take over these loans and they can realize some value, okay, and provide some sort of special expertise services to the banks, right? Asset reconstruction companies. Who will be regulating this asset reconstruction company? It would be RBI. This was also a second generation reform which was taken by Indian government to help Indian economy. Now, I've been using this term, second and third generation reforms, kind of synonymously, but please note that there is a specific difference between the both. Your first generation of reforms is what we spoke when we started our 1991 journey. Whatever reforms we have taken from 1996 till 2007, this is what we call as second generation. The third generation of reforms, that is what we want in the present scenario to further boost the economy in a positive direction. Okay, so please keep this one smaller difference between first, second, and third generation reforms as well. Did the reforms that we take give us dividend, right? This is the million-dollar question that we all will have. Whenever we take a reform, now, whenever we make changes for the better, we expect positive growth. But when you look at our country, when we started our 1991 reforms and we started slowly seeing some growth where our foreign reserve ratios and all increased. But by the time of 1998, you had East Asian crisis, which started from Thailand, right? And it was not just limited to Thailand. Other East Asian countries such as Korea, Singapore, they all got affected. And finally, the almost the whole of the world was impacted because of this 1998 East Asian crisis. Along with that, we had sanctions which were imposed on us by America and other countries for carrying out nuclear tests. So this limited the kind of investment that we would be getting from outside of India, right? We had droughts which limited the productivity of agriculture in the economy. In 2003, sorry, in one, you had 9/11 attacks which happened in USA as well. All these things, these were external shocks, some of them internal shocks. They did not give us this dividend in the short term. But in the longer term, what happened after 2003, when all these things started to decline, these external shocks started to decline, we saw a positive trend. Whatever reforms we had taken post 2003, we started to see some effect. What was this effect? When global GDP was growing around 4%, our Indian GDP started to grow by 8%. This delayed growth, right? This delayed growth was primarily because of reforms that we had taken in your first as well as second generation reform. Now, I've told you this. Whatever reforms we have taken in 1991, right? The same set of reforms, the same nature of reforms we started to take from 2014 till 2022. Have we seen a positive dividend just after we have taken the reforms? No. Why? Because there were so many shocks as such. What were these shocks? Russia, Ukraine, but more than that, you had the shock of COVID-19. We brought in major structural reforms such as GST, which was not completely a foolproof system in the initial few years. Then you had demonetization, right, which also created certain amount of challenges for the economy as a whole, right? But what the government believes is, in recent few months, these shocks have been residing. Since these shocks have resided, there is a greater probability that we will go back to a situation where our economy will outperform the global GDP growth. Right? What are these reforms that we have taken from 2014 to 2022? Let us discuss that now. Your economic survey has highlighted that the reforms that they have taken in the last few years is nothing but a continuity of what we have been seeing in our country since 1991. That is why the name continuity of reforms and the underlying principle of all these reforms has or his Sabka Saath and Sabka Vishwas. Okay, let us look at some of these important reforms. Now, they have given a very beautiful diagram in your economic survey, and in which they have highlighted that they have tried to create public goods. Now, if you remember, I've told you this, whenever you come across simple terminologies like this, you have to know what it means. I'll explain you what is public goods. Just give me some time. Apart from creating public goods, we have also tried to bring in a governance system which has seen a lot of trust. After 2008, now, okay, our economy went through an economic cycle, a phase where it started to contract. Why did it start to contract? There were certain external events, for example, the Great Recession that happened in 2008-9 in America. Along with that, you also had non-performing assets which started to grow in the Indian economy. Okay. Apart from that, you also saw policy paralysis where decisions were not taken in a timely manner. Apart from that, you also saw scams that happened in our country, be it the Commonwealth game scam. There is a long list of that. All these things, they reduce the trust of the common people, of the business person within India and outside India to invest in India. So there was a very critical need to bring back the trust of the people, of all the stakeholders, and that is what we have focused in the last few years, and that is what we will be focusing even more going forward. We have created public goods, we have tried to improve trust. Apart from that, we have also tried to improve agricultural productivity. As you all know, nearly 58% of our population is directly dependent on agriculture. And most of the farmers that we have in our country, nearly around 80 to 85%, have farmlands which are just few acres, few hectares, right? So it is very important for us to make sure that these farmers, 58% of our population, see some growth, see some productivity. That is why we have taken a lot many steps to double their farmers' income over the years, double their income. Along with this, we have also seen encouragement for private sector participation. We have started programs such as Startup India, Stand Up India, Make in India, right? Production linked incentive, so many reforms in the last few years. Now, so all these things, continuity of reforms, these are the four pillars on which we have tried to make reforms possible in our economy. Now, when we focus on these four parameters, what are the changes that we are going to see? It will improve the ease of doing business. What is ease of doing business? It is nothing but a product market reform. It will help in entry and exit of companies in India, right? When we improve ease of doing business, what will increase? Competition. Go back to the definition of product market, right? Continuity of reforms. There is a reason why they have used such term, continuity of reform. Ease of doing business has improved. Apart from ease of doing business, we have also focused on ease of living. What is ease of living? It is having access to basic necessities, basic opportunities, right? We have come out with various healthcare schemes. We have come out with various education related reforms. All these things, they help in improving the human resources. Now, all of these things help in retaining talent in India as well, ease of living. We have started programs such as Smart City to build smart infrastructure, right? So these four pillars together have contributed in terms of ease of doing business and also ease of living. Now, once you focus on all these things, what is going to happen? There will be efficient resource allocation in the economy. As it is, as you all know, any country does not have an unlimited resources. whatever resources we have to utilize them in an efficient way, and that is what we are trying to do here. Apart from that, we are also trying to enhance productive potential of economy and its people. How are we trying to do that? By investing in healthcare, education, I told you, na, human resources, that will improve. So whatever reforms we have taken in recent times, two goals we have been able to achieve: efficient resource allocation and economic potential and potential of the people has developed, right? This diagram is very important. They might ask you, which of the following are the reasons for hopeful and optimistic outlook of Indian government? Trust-based reforms, creation of public goods, right? Banking sector reforms. They will give you and they will ask you which one is the correct answer. So you should be very careful when you are looking at this diagram. All right, moving on. Let us understand what are these terms. Terms such as public good, private good, merit goods, and demerit goods. What is a public good? Imagine there is a commodity. Now, if you're using that commodity, you're not creating any sort of exclusion for others. Now, when you breathe air, are you creating exclusion? Are you preventing anyone else from breathing that air? No, right? That is what we call as no exclusion, non-excludable. Public good is also non-rivalrous in nature. What does this non-rivalrous mean? There is no stringent or very aggressive competition when it comes in using this commodity. Do you see a lot of competition in terms of breathing air, usage of public parks? No, right? That is what a public good is all about. Public goods are non-rivalrous in nature. They are non-exclusion or non-excludable. These two important things, please remember. Apart from that, when we talk about private good is something where you see rivalrous nature, all right, and you will also see exclusion. For example, housing, land. I have money, I buy land, I'm excluding you the opportunity of utilizing that land. You want land, but you don't have money. You're getting my point. So there is that exclusion, and there is also that rivalry nature, or there is that competition for access to these goods. That is what is a private good. Sometimes people tend to confuse that public good as well as merit good are one and the same. That is not the case. Merit goods are those goods where if when you consume it now, it creates positive external benefits, right? Merit goods create positive benefits. What are these positive benefits? If you provide healthcare, if you provide education, it's good for you, right? You will have access to multiple opportunities, and at the same time, right, it will be good for the whole of the Indian economy as well. Demerit goods is completely opposite of that. When you as consumers consume it, it will create negative benefits for you. What are these examples of demerit goods? You have alcohol, right? You have cigarettes, right? All these things are demerit goods. Okay? Public, private, merit, and demerit. In the course of next few videos, we will be discussing a lot of economic terminologies like this. If you remember, I started this video by talking about four phases of economic cycle. What were these four phases? You had expansion, then you had peak, third one you had contractionary, and finally you had trough or the worst phase. Now, when you are in expansion and peak phase, now expenditure will easily come from private sector. Need not focus much on expenditure during these two phases. But when we come to contractionary and trough phase, now here the private sector will be a little bit fearful. Why will it be fearful? What if they invest the money and they lose that money in some sort of a recession or shock, right? So what do the private people do? They will stop their investment until and unless this contractionary and trough phase is removed. And in this time, if the government does not invest, if it sits back and relax, the economy will definitely go into a depression. So to prevent such things, government has to invest during this particular phase, and that is what Indian government has done in recent times. If you look at this particular graph by 14, 15, 16, 17, government expenditure, there was an increase and there was also decrease. By fiscal year 18, it had decreased quite a lot. But after fiscal year 20, when we started seeing COVID impact increasing, what did the government do? Did it sit back and reduce? No, it increased. It has consistently increased. This is what is government's expenditure. And look at this. Here, the term that they've used is capital expenditure. What is a capital expenditure? It is those expenditure which create assets in the long term, right? Now, when government is doing such capital expenditure, right, to get away from contractionary and trough phase, what will happen? It will result in confidence being increased in the economy. Imagine if the government is building a road, it has to buy the cement, it has to buy a lot of materials, it will buy it from private companies, they have to produce this. Overall, the confidence starts to increase, and the economy will come out of that recessionary phase, right, and try to expand again. This is what we call as crowding in effect. What is crowding in effect here? You are attracting investment from all sides because you have invested to a larger degree to increase this confidence, right? So let me read out this theory in detail. The crowding in effect is a theory that argues the opposite of crowding out effect. What is crowding out effect? You're investing in such a way that you're preventing investment from other resources, right? That is not happening here. According to this concept, increased government borrowing and spending increases private spending rather than reducing it. Look at it, look at here. Here, government is investing. I gave you the example of roads. It increases confidence and it brings in private spending. This is what we call as crowding in effect, right? Crowding in, is it positive or negative? It is positive in nature, right? That is one of the reasons why we think our economy, hopeful and optimistic that our economy will be growing on a higher trajectory in this and the upcoming financial years as well, right? Please remember this graph after 2020, government's capital, not revenue. Okay, be careful. Government's capital expenditure has consistently increased. All right, moving on. Even after 1991, right, during the times of Atal Bihari Vajpayee in 1999, we had started this project of Golden Quadrilateral, right? Even now, post 2014, we have come out with an infrastructure push, right? Upgrading and creating new infrastructure so that there is competition in the economy, so that ease of doing business improves in the economy. And your economic survey has spoken about programs such as Bharatmala, Sagarmala, Udhan, National Infrastructure Pipeline, and various digital reforms to say how this is going to help us in the future years and how it has already helped us even now as well. All right, let's look at each of these reforms in some brief detail. The first program that we are going to discuss under this is Bharatmala. What is a Bharatmala project? It was started in year 2017, where Bharatmala is an umbrella program, right? Umbrella program for all infrastructure projects related to freight and passenger movement, and which is implemented by Ministry of Road Transport and Highways. Right? Now, as per this Bharatmala project, now we are aiming to create around 84,000 kilometer of highways in the country, and we are hoping to spend around 7 lakh crore. Right? Please remember, it's an umbrella program. Whatever programs we had, which was implemented by Ministry of Road Transport in the domain of freight and passenger, now that has come under Bharatmala. How many kilometers are we trying to create? Around 84,000 kilometer of highways. And how much are we spending on this? 7 lakh crore of money. What are the things we are focusing under this Bharatmala? We are focusing on developing economic corridors, inter corridors, feeder routes, national corridor efficiency, and even, and this is important, on improving border and international connectivity roads, along with coastal and port connectivity roads and greenfield expressway. What is greenfield? You're creating something new for the very first time. Right? Opposite of greenfield is brownfield, where you're upgrading what all things that you have had. Okay. One more positive thing about, there are a lot many positive things about this. Some of the important ones are, as of now, you have 300 districts which are connected to national highways. After Bharatmala, na, you will be connecting almost 550. Right? Now, when you're going for this Bharatmala project, this will create jobs. This will attract investment, right? All these are positive effects, right? All these things are going to ensure that India becomes a $5 trillion economy, right? As soon as possible. Okay. One of the important projects, not just for passenger, but also for goods movement, implemented by your Ministry of Road Transport and Highways. One more program that we have started happens to be Sagarmala. Now, what is the objective of the Sagarmala, which we have started in 2015? In our country, we have around 7,500 kilometer of coastline. Sagarmala aims to use this coastline in as effective and as efficient way as possible. This program is implemented by Ministry of Ports, Shipping and Waterways. So what are the various components of this particular program? The various components are, you're trying to modernize and develop new ports. You're trying to improve port connectivity. You're trying to improve port linked industrialization, right? Developing industrial areas near the ports. You're trying to ensure the coastal community development. In the name of development, we should not harm the coastal communities. To prevent such harm, you have such coastal community development programs. You have coastal shipping, right? And more importantly, you're emphasizing on inland waterways transport. Please know, logistics in our country, transport of goods from one place to another place has started to happen a lot more using roadways. Now, roadways, you know that you cannot carry a lot of load, and you also know that there is a greater probability of accidents. When India has so much of ports, inland waterway potential, Sagarmala can use this potential in a effective way, can minimize the usage of roadways. That is one of the important reasons behind developing inland waterways in a major fashion. All right. In 2021, the government, okay, started a program called as Sagar Tat Samriddhi Yojana. Now, the Sagar Tat Samriddhi Yojana is part of Sagarmala. What is the objective of the Sagar Tat Samriddhi Yojana? It is to develop coastal infra development. All right. Apart from that, to improve coastal tourism, to improve coastal industrial development, and finally, coastal community development as well. Okay. Now, any project related to Sagarmala, it will be overviewed. Okay. It will be regulated and monitored by an apex committee, right? What is this apex committee called as? National Sagarmala Apex Committee. And this apex committee is not headed by Prime Minister, but rather by Minister of Ports, Shipping and Waterways, one of the major infrastructure programs started by Indian government. Please remember these reforms, they have focused exclusively in your economic survey. There might be a probability of them asking a question on this. Moving on. One more program that we have started in the domain of civil aviation happens to be UDAN, that is Ude Desh Ki Aam Nagarik, which is implemented by Ministry of Civil Aviation. The objective of this UDAN is to make air travel as affordable and as accessible as possible. We are also taking extra care to connect or improve connectivity to northeastern region, right? Along with that, we are also focusing on developing routes, right, which will assist farmers in movement of their products. You all know that agriculture products does not have so much of shelf life, but if we provide air connectivity to their products, there might be a better value realization for their produce, right? That is one more project, infrastructure project we have taken. We are developing so many airports across the country. We are modernizing the existing airports. We are incentivizing companies to participate in UDAN. All right. So all these things are major initiatives, infrastructure initiatives taken by the government. Now, one more major program that we have started from 2019 and which we will be implementing till 2025 is your National Infrastructure Pipeline Project. Now, what is this National Infrastructure Pipeline Project? Here, we will be spending around 111 lakh crore, right? And this 111 lakh crore, where we'll be spending on infrastructure. What kind of infrastructure? Not just economic infrastructure, but also social infrastructure. If India has to become a $5 trillion economy, our infrastructure should be world class. That is one of the main reasons for starting this program. Now, there was a committee called as Athanu Chakraborty Committee which was appointed to look into this matter. And this committee has said that 24% of this 111 lakh crore should be spent on improving our energy infrastructure, 18% on roads, 17 on urban ways and railways, 12%. Now, this 111 lakh crore, it will not all be from center ka resource, but rather center, state, and even private will be participating in it. Okay, in the ratio of 39% for state and the remaining by private sector. Which ministry is associated with implementing and monitoring of this particular project? It is your Ministry of Finance, right? Moving on. The fourth pillar of reforms that the government has taken in recent times happens to be in the domain of digital reforms, right? So what have we done in this digital reforms? We have started an app called as Umang. What is Umang? Unified Mobile Application for New Age Governance. It was developed by your Ministry of Electronics and Information Technology. Using this app, you can access many of your state as well as central government services, right? Essential government services. What is the underlying principle under this? Ease of doing business. Apart from that, you also have National Single Window System, which is part of your Ministry of Commerce. Now, using this National Single Window System, you can have one place where you can get all your business approvals. You can also store some of your business documents in this National Single Window System. Apart from this, you have learned about DigiLocker, right? We have studied about Jam Trinity. So on. All these are reforms which has used digital technology to a very large extent. You also have PM Gati Shakti Yojana. There was a question which was asked in mains 2022 on this particular issue. What is Gati Shakti Yojana? Here, what is happening in our country is there are so many multiple ministries. Now, these ministries, they work in a silo manner. They do not interact with each other. And this creates certain amount of inefficiency. How so? Imagine you are from telecom sector, you're working in Ministry of Telecom, and there is one more person who is working in roadway sector. So they have to build a new road. So what they do, they build a new road. But after some time, you get a direction from your upper management that you have to lay ground cables. So what will you do? You will try to remove this new road which was built, and then you will try to put all these cables. It's a waste of money. It's a waste of time. It's not an efficient use of resources, and so on. So what PM Gati Shakti Yojana does is it brings multiple ministries on one single digital platform. And on this digital platform, they can try to minimize their work as much as possible without compromising on efficiency. This will lead to efficient usage of resources, which is one of the important objectives that the government is aiming to achieve. I showed you the diagram. Remember? Yes. Right? These are not just the only digital reforms, there are quite many. Another major digital reform happens to be in the e-commerce sector. As of now, you all know when it comes to e-commerce sector, we have over emphasis or over reliance on platforms such as Amazon, Flipkart. So when you have such private firms playing a huge role, it can lead to monopoly. Yes or no? So what the government has done is it has created an open digital e-platform that can be used by people in the country. Now, if you are on ODC, that is Open Network for Digital Commerce. If you are registered with ONDC, you can buy a product which is not only in ONDC, but you can buy a product which is there in other digital platforms. If you look at Amazon, if you're registered with Amazon, you have to buy products which are there on Amazon only. And Amazon can make rules and regulations which might not be always in your best interest, which might not always be in the best interest of business people. But if you have an open system for digital commerce, such as Open Network for Digital Commerce started by your Ministry of Commerce, then such monopoly will be avoided. Being part of ONDC, you can buy products which are there on other platforms as well. It will create more competition, it will reduce monopolistic tendencies and ensure a lot more of your product market reforms. If you look at this program, now the underlying core principle behind this program is very simple. That is to democratize the e-commerce sector in India, right? This is a major step which has been taken in recent times. You can expect a question on this. So please be aware. Which department has taken this step under Ministry of Commerce? You have a department for promotion of industry and internal trade that has taken this. Amazon has already joined this particular initiative. So if you're on ONDC, you can buy or you can buy something which is there on Amazon as well, right? That's a good development. Moving on, let's discuss some of the trust-based measures taken by the government. What are the trust-based measures the government has taken? It has started or it has implemented an act called as RERA. What is RERA? Real Estate Regulation and Development Act, which was started in the year 2016. Now, what was the requirement of this RERA? Real estate sector in India was growing at a very exponential manner in the last few years. But there was no transparency in how this real estate sector transactions were happening. And there was no safeguard for common people. You have come across articles where you have read a group of people have invested in an apartment, but even after 10, 15 years, they have not received anything, right? To prevent all these things, to create more clarity in real estate sector, the government started this Regulation Act, Real Estate Regulation and Development Act. Now, the primary objective of this is to protect your home bias and also to ensure by giving clarity that people will start investing, right? Now, this investment, if it increases, now it will obviously be good for the overall growth of Indian economy. Now, what are the important aspects of this RERA Act? It has established state level regulatory authorities, right? At each and every state level, you have a regulatory authority, not just at the central level. Just like your TRI, it also has a appellate tribunal. Okay, if the authority gives any kind of judgment that you're not happy with, you can appeal in appellate tribunal, right? Now, one more very interesting thing is 70% of whatever money these real estate developers take from you, now, this 70% should be kept in an escrow account, right? And this 70% should exclusively be used for construction. Sometimes what used to happen, these companies, they spent around 40 to 50% just on marketing. And they used to compromise on construction, they used to delay and everything. But now, nothing as such. If you take a home, an apartment, let us say, and if there is not much of good work which is done, the liability for that will now be exclusively placed on your developer. That is one more interesting aspect of this particular RERA Act. Okay. Apart from this, punishment related to offenses has also been mentioned in this RERA Act. The whole purpose of this RERA is basically to provide clarity so that trust in the system increases. Okay. One more thing from your prelims perspective, please note this down. When you take land, it comes under your state list. But when you take enforcement of any contract, that comes in your concurrent list. It is in this contract list that the government has implemented this RERA Act in the year 2016. Okay, moving on, one more act that they have spoken about in your economic survey happens to be Insolvency and Bankruptcy Code. Now, what is this insolvency and bankruptcy? Let us understand the terms and then we will discuss more about it. Insolvency and bankruptcy. Insolvency is where you are unable to pay your dues, right? It is as simple as this. Unable to pay your dues. Bankruptcy is when your insolvency is legally recognized by an appropriate authority. Okay, this is what bankruptcy means. And when did this code come? This also came in the year 2016. You must be remembering SURFACE Act. Yes or no? What was the objective of SURFACE Act? To deal with NPA. Insolvency and Bankruptcy Code is somewhat similar to it. Now, in an economy, right, resources are limited, and you have to always make sure that these limited resources are used in a efficient and an effective way. Now, imagine if a company is unable to meet its objective, right, and it has taken money from a lot of creditors. Under IBC, either the creditor or the debtor can file for bankruptcy. Now, when such a case is filed, what is going to happen? Within 180 days or maximum 270 days, right? The claim has to be resolved. Resolution has to be found for the issue. If you can try to make some management changes and get away from that insolvency and pay your creditors, well and good. If you can't do that, what should you do? You have to sell and pay your creditors, right? All these things. We have established an insolvency and bankruptcy board, and this board will be overall looking into so many insolvency professionals as well, who will be helping creditors and debtors to deal with this situation, right? This is one more important activity taken by the government, trust-based activity taken by the government in 2016. Now, when you look at this insolvency board, now, insolvency issues, there are two important institutions. One is National Company Law Tribunal, and you also have Debt Recovery Tribunal. Now, National Company Law Tribunal would look into company insolvency plans. And when it comes to Debt Recovery Tribunal, it will look into individuals and partnership based claims on bankruptcy, right? Please remember that. Now, your insolvency board, it will look into insolvency professionals and also your information utilities. These are companies, right, which will give informations related to creditors, debtors, and all these things. Even this will be monitored by your board. And this board now, it will have 10 members. These 10 members will be from Ministry of Finance, Law, and RBI, right? One more important aspect when it comes to insolvency. Why is it that you need to know this? Because here, look at this. Here you have diverse stakeholder representations from three important entities in India. Again, you're trying to improve trust of the public on the system. Few more things that we have done in recent few years is even in the domain of taxation, right? If you look at direct tax, we have gone with faceless assessment. If you look at certain taxes, right? If for some reason a person was not able to file returns, we are trying to not consider it as offense, right? Apart from that, what else? When you look at indirect taxes, when we started its implementation, it did not go in a smooth manner. But if you look at the last few years, GST has been churning out almost consistent revenues every few months. It's on, right? You had around 70 lakh people who had registered under your indirect tax, but now it has gone well past above 1.2 crore registrations, right? That is also one more good trust base because in GST you are working in as transparent way as possible and you're holding people accountable. That is the whole principle behind your trust-based governance. Now, that is what we are seeing. And we have also rationalized corporate tax. Okay. When it comes to corporate social responsibility, if a company is not able to meet it for any reasons, it will not be considered as a criminal offense as such. These are few things in the domain of taxation. Okay. Apart from that, now, one more important program started by the government in recent time was your production linked incentive scheme. It was started in 2020. What was its objective? The objective was very simple to increase domestic manufacturing capabilities in India. Now, in the name itself, you have a very important key term that is production linked. If a company, if it incrementally increases production based on a certain year, that incremental increase could be as less as 1%. If it incrementally increases its production, manufacturing, right, then the government will provide it with certain incentives. The government has earmarked around 1.97 lakh crore for this particular project, and it has around 14 sectors which are part of this. What are the various sectors? 14 sectors, some of the important ones. You have automobile, you have electronics, you have pharmaceutical, solar modules, and cell batteries as well. Chemistry, cell batteries, which come under this particular production linked incentive program. One more new policy that we have come out with in recent times for improving the product market reform happens to be a national logistics policy. Now, as per this national logistic policy, in India, we have logistic cost, right? Around 14 to 18%, and we have to reduce this by 8% by the year 2030. If India wants to be an advanced economy, this is what is required, single digit logistic ratio. Now, what is this logistics that you need to know about? Logistics is nothing but, let us say, from a source till a destination, all right? How you are transporting the resources, how effectively and efficiently you're transporting the resources, that is what we call as logistics, all right? Now, in our country, the logistics have been a bit high. It's also been a bit costly as well, right? National logistics policy aims to reverse this particular scenario. Okay. Now there is an index called as Logistics Performance Index, which is released by your World Bank. And India wants to be in the top 10 of this Logistics Performance Index. And how are we trying to get there? We again here also we are trying to implement digital solutions, right? Unified logistics interface, bringing various stakeholders and to minimize confusion, comprehensive logistic action plan as well, right? Now, whatever we learn from this logistics policy, we will be using that to improve our PM Gati Shakti Yojana. Okay, one more important thing, and you must know that India has an index called as LEADS index. Logistic ease across different states. It is released by Ministry of Commerce, right? All these logistic policies will be used to improve these PM Gati Shakti Yojana as well as LEADS index. Okay. Now, please remember, these are not the only few reforms that have been taken in the last few years. There have been multiple ones. Even if I talk about infrastructure now, you have this one very major program called as National Monetization Plan. What is this National Monetization Plan? There are three terms I want you to know as of now. What are these three terms? One is your globalization, not globalization, sorry, let me just erase this. When it comes to monetization, I want you to have clarity on three terms. One is disinvestment. The other thing is privatization. And finally, you have monetization. We have recently come out with a national monetization plan. What is this national monetization plan? Here, there will be certain resources at your disposal. Okay, but you're not using it. It is kept idle. Imagine you're living in a home which has around four cars, but you need only two cars. What is happening to the other two remaining cars? It is remaining idle. So what you will do? You will lease it out, right? When you lease it out, you will receive some amount of money. That's all. This is what we call as monetization. Here, are you transferring your ownership over the car completely? Absolutely not. You're just leasing and your resources will come back to you. That is what is monetization. In disinvestment, what happens? Imagine there is a company such as ONGC, which has been created 100% government investment. Now, government requires money. It requires money to implement certain social expenditure plans. So what it does in disinvestment, it gives out certain stake in ONGC to some companies. It could also be for individuals, right? Some ratio. Here in ONGC, only some ratio is going, not the whole ownership. This is what we call as disinvestment, right? It can go for 10% stake sale in ONGC. Still 90% will have, still it will retain the management control.
It can do this disinvestment until 51% also. If government has 51%, still it will have that control. Na? That is the thing. Now, if you look at privatization, what will happen in privatization? Here, ONGC, right? Majority of the shares will be sold, right? And these shares, imagine we have sold 51% to a company. When we have sold 51% to a company, what happens? The management control of that particular company shifts from the government to private entity. This is one example of privatization, right? Partial privatization. Management is changing from government to the private company, but still 49% government role is there. Stake is there, investment is there. That is partial privatization. Full privatization is 100% of ONGC, which is government investment. You're transferring all that 100% to private. This is what your complete privatization is. What we saw with Air India was an example of privatization. Initially, when we started 1991 reforms, we went for outright privatization related to certain. After that, we have tried to go for disinvestment, all right? But in recent times, when we talk about assets such as Air India, which where we tried a lot many measures to revive it, but we could not. In such kind of cases, we have gone with complete privatization. The proceeds from such disinvestment and privatization, we are using again to improve the socio-economic nature of Indian economy. These are some of the reforms that they have spoken extensively in your economic survey. There is a very high probability that you can expect some questions from this chapter. So please pay quite a lot of attention to these areas. All right. What are the other things that you need to know? When we talk about agriculture, since 2014, here also you have taken a lot many steps. Some of the important ones are you have started the initiative of soil health cards where you are providing information to farmers about their nutrients in their soil and what they need to do to improve their productivity. You've also started micro irrigation fund to encourage farmers to develop sprinkle drip irrigations. You have started agri infrastructure fund, which is part of your NABARD for improving infrastructure when it comes to agricultural area. You have started Kisan Rail to cater to the movement of perishable agri horticultural commodities. We had a similar provision in your Udan program as well, right? But the most important one happens to be ENAM, where you're trying to connect agricultural mandis through electronic means throughout our country. Now, who is implementing this ENAM? You have a entity called a Small Farmers Agribusiness Consortium, which works under Department of Agriculture, Ministry of Agriculture. That is the one important lead agency which is implementing this ENAM. The government is also trying to encourage formation of farmer producer organizations because as a farmer now, if you go and try to negotiate for better price in front of a company or a person, you might not have that much of significance. But if you go as a group, they have to listen to you, right? That is why they're encouraging all these things. I started today's video by telling you how the reforms that we have taken in 1991 and since then, there is a similarity between those reforms and the similarity between the reforms that we have taken in the past couple of years. I told you we face certain amount of challenges post 1998. What are these challenges? Droughts we had, US recession, 9/11 attacks we had, technology burst, East Asian crisis, and a lot many other things. I also told you what are the few things that we took to improve our country ever since 1991. And if you look at on this side, we have listed out measures taken from 2014 and 22. Okay. Now, I also told you once these things major issues started to fizzle or reduce, we again realized high level of growth. I told you, remember, 4% was the global GDP growth, but we started growing almost double that. These are just estimation, not exact numbers, right? Double than the global GDP growth, our Indian economy grew. So the government thinks, since we have invested in digital reform, since we have invested in skill initiatives, since we have invested in infrastructure, right? All these things will have a positive effect, since the effects that we have faced in the last few years, such as COVID or GST rollout or demonetizations, all these things are reducing. So in this financial year and in the upcoming financial year, Indian economy is going to grow at a much larger pace. And we are on line to meet our target of $5 trillion economy, right? I hope this video was useful. In the next few videos, we are going to discuss some more critical aspects related to economic survey from your exam perspective. Right? All the very best and prepare well. Thank you.